The Market with Govinder, and I hope you've been doing well. We're going to continue our discussion this week, and obviously the biggest focus here is interest rates and what central banks such as the Bank of Canada and what the Federal Reserve did this week by raising their interest rates by 0.75 basis points. And obviously what that means for real estate market here in Ontario and Canada. Obviously, I'm assuming you may be hearing about what's been going on in the market. Obviously, crypto has been dropping, and there's definitely been a lot of chatter about the recession, and obviously if you're an investor in the stock market, that's been continuing to be very rocky this week, as it was a massive week in terms of what has happened, and I'm going to take you through that. You can always follow me on Twitter or Instagram at grandava_8 if you ever have any questions or curious. And I also always like to put this out there. This is not financial advice. This is my perspective, along with obviously the information I'm going to bring with you and their perspective as well. So if you're looking for advice, I always say reach out to your financial advisor, someone you trust, someone you can work with. But if you have any questions for me, you can always reach out to me in my handles. It'll be in the description, or you can obviously leave a comment here, and I'll get back to you or like. So let's kick it off here. This is first an article here by the Canadian Press. This is from this week, Wednesday, June 15th. And it reads here, the Bank of Canada likely to mirror 0.75% Fed hike next month, economist from here in Canada. And you can see why the Fed raising its 75 basis points was so important, because Canada usually follows suits in terms of monetary policy. So we can see here the Federal Reserve raising its key interest rates by 3/4 points, and this was this week on Wednesday the 15th, June 15th, of a percentage point. Its largest hike since 1994, increases the odds of Bank of Canada following suit next month, and from a few economists. And obviously that's to fight inflation. Inflation in print came at 8.6%, I believe, most recent. And that's obviously on top of mind, and they will continue, and I'll share a little bit more about that as well. Well, the Bank of Canada recently upped its interest rate by half a basis points, 0.50%, two times already. And their next rate decision is July 13th. So, they may follow suit and do the same thing as the Federal Reserve did in the US. There's a quick note here. One of the top arguments against the bank acting more aggressively was just that the Fed wasn't expected to be that aggressive, because before this week, the Fed had taken those larger hikes off the table. So they're like, oh, they weren't talking about it. Now it's obviously in focus, and Bank of Canada, it adds the pressure, right? And many different economists from all the big banks have, kind of said the same thing. If you're interested in reading more about this article, it definitely will be, it is in the description. So you can check that out and read a little bit more. And again, continuing on that same topic, traders put now 80% odds on a 3/4 point rate hike in Canada. So this seems like, the odds are obviously increasing, and 80% is a good bet. So if you have a variable mortgage, a line of credit, and that is going to go up depending on what kind of variable you have, and obviously line of credit is based on prime, so prime will increase. So that will affect, if you borrowed money. Bets are mounting for a supersized interest hike from the Bank of Canada next month, on the heels of expectations for a 75 basis move from the Federal Reserve this week. So again, 80% chance, but we'll see where that's going. But very interesting. I just want to share with you quickly here a quick headline. Private mortgage lender Magna suspends new loan applications until the fall. And this is just, a few comments here. They suspend new loan applications until September. It's an unexpected move from a lender that has grown rapidly during the pandemic's real estate boom. The suspension was announced less than a week after the Bank of Canada raised its benchmark rate by 50 basis points, the most recent one. And this is from a most recent article here from Globe and Mail. You can see here June 14th. So you can see what's happening with lenders as well. They're re-looking at, hey, do we lend out money at this time? What does that mean for us? How is our financials looking? So everyone's reassessing. And if you've been in the market looking for a mortgage, I'm quite sure you have experienced it. And I obviously spend a lot of my time with mortgages and talking about this with individuals. So it's definitely been on top of mind, and we're seeing drastic changes, which is on the screen, and I'll take you through this. So this is from Rob McLister. So he's definitely a mortgage guru, and if you follow him on Twitter, you'll definitely find his information helpful. Scotiabank is the first of the big five to take uninsured 5-year fixed rates over 5%. It's eHome, which is what their product is called. It's a mortgage. 5-year fixed rate is now 5.23%. So all or majority of lenders have taken their interest rates above 5% for 5-year fix if you're looking in the fixed market. And also a big point of that is that you have to qualify at a larger rate. So you can see here, borrowers must prove they can afford a stress test payment at 7.23%. And that's almost 2% higher than the stress test for variable rates. Obviously, there's a big disconnect there. So if you're looking for a variable, you have a less of 2% less in terms of that stress test when they're running your numbers. And on the mortgages, obviously, if you're from a buyer or seller perspective, this is a big headline as well. Canada home sales dropped 22% from last year as rates rise. So, just a few comments here. The Canadian housing market continued to cool in May amid rising rates, with the average home slipping 711,000. That's a decline of nearly 11% from March when the Bank of Canada first started hiking. However, May prices are still up 3.4% from the same time last year. And just from here, the Canadian Real Estate Association, this past Wednesday on June the 15th, said national home sales fell 8.6% on a monthly basis in May, and a more moderate decline than the 12.6% they saw in April, bringing activity to pre-COVID levels last seen in the second half of 2019. So you can really see what that means. Less home sales, people are relooking at the market. I've already been talking about this for quite a bit, that buyers have more options. Sellers are obviously still trying to figure out the market. And it's a little bit of, hey, what price can I get for my home? So it looks like it's going to continue. And obviously in June, Bank of Canada raised interest rates. They're going to raise interest rates in obviously July as well. So just a quick note here that from BMO senior economist Robert Kaviak said in a research note on Wednesday that a correction in the Canadian housing market is well underway across a number of markets. Prices will likely be under pressure into next year from a few comments. So we're definitely going to see this action. And as you know, as I've been sharing, when prices go or when interest rates go up, prices adjust. And obviously we can see it from this commentary here from this is from Monday, June 13th from the Canadian Press. Nearly 1 in 4 homeowners would have to sell their home if interest rates rise. And this is from a survey, I believe, from April. So that's from a Manulife Bank of Canada survey. The survey was conducted on April 14th and 20th. Also found that 18% of homeowners polled are already at a stage where they can't afford their homes. Over 1 in 5 Canadians expect rising rates to have a significant negative impact on their overall mortgage, debt, and financial situation from the survey. And just here, a little bit of note from the Bank of Canada remains on a rate hike path as it tries to tame inflation, as we've been talking about, which is now at a 31-year high at 6.8%. And as I mentioned, on June 1st, they just raised interest rate by 0.5%. So this looks like this will continue, I should say, actually, as that July 13th decision will most likely bring 75 basis points. And this is across in terms of central banks all over the world. And a few big names such as JP Morgan, CE Jamie Dimon has warned earlier this month of an economic hurricane. You also heard from Elon Musk. He has a bad feeling about where the U.S. economy is headed. And you can see here recession talk rampant among some of the Wall Street's biggest names. So we're talking about it. Obviously, we're hearing this from these individuals who are putting it in the mainstream. And obviously, if you've been following crypto is definitely in a bear market along with stocks, and homes will be the next to be felt, as someone is referring it to the everything bubble, as everything adjusts and goes from there. So I hope you found this video helpful. Again, any likes, any comments, a subscription is always appreciated, and I'll continue to bring this information about the market and obviously focus on real estate on a weekly basis. So I hope you have a great weekend and a great week ahead of you. And thank you for taking the time to watch. Have a good one.